have been skeptical about this whole euphoria around this for some time, that it might already be baked into the cake. That is a deal. And we've got to calm down here, pretty much, right?
Well, I think to a certain degree, Neil, that, you know, nobody would be surprised if we do a deal with them, because I think everybody thinks it'll happen, and I do too. So I don't think that would be a surprise. I just think it's already in the prices at this point.
So let's get a sense of what might be in the offing here. If the president were to delay the imposition of these tariffs on more than $200 billion worth of Chinese goods, that would be a sign of good faith. The question is how long he would push them back. What do you think?
Oh, I think he would continue to do it. I mean, I think they want a deal. They know they're a big partner. I think China knows that too. So it's just a matter of sitting down and deciding, in the end, finally deciding on those 6 items and what they want to do with it.
You know, Ted, I know you and I have talked a lot about what makes a good deal or whatever, and I'm wondering, the longer this is dragged on, if the markets would be satisfied with just any old deal. It gets the prospect of a trade war off the table. I get that. But maybe because this has gone on for so long, markets would want to see something substantive. What do you think?
They could, Neil. I know what you're saying there. You look at it for so long and you think, well, we went this long and we only got, you know, a really small portion of what we thought we might get.
Right.
So we could have an impact. You're right.
So let's step back at the markets and get your sense of where we stand. You know, we looked at the data today, and I know you follow this much more closely than I, but it was a little weaker than expected on the Philadelphia Fed survey, durable goods front, the core capital goods front, existing home sales, both coming in a little bit less than expected, still stronger year over year, but giving the appearance that momentum is slowing. Do you buy that? Do you worry about that?
Well, one of the things we look at is, you're right on the momentum, it's the rate of change. You know, you can be up, but you're not as up as much as you were maybe a year ago. And
right.
So the rate of change is what you want to look at. And if that rate of change is declining, which it has been doing now for two quarters, then you have to start taking that into consideration. It doesn't have to go negative, but it can go negative. But that's the first trend you want to start to look at.
Do you see that now?
I see that now. Yeah, so many things now, the rate of change is declining. It doesn't mean it's negative. It just means that the positive is much smaller than it was before. And those are the first things you notice before you actually get into some tough times.
All right. I like the way you worded it. The positive is smaller than it was before. That's well said. Ted Oakley, good seeing you again. Thank you.
All right, Neil.